This is your technical update from the LMAX Exchange Research and Analytics Desk for Thursday, April 30th, 2015. Euro dollar. So it all gets a little bit tricky for the euro after the market took out some critical resistance at 110.53 on Wednesday. At this point, we need to consider the possibility of a double bottom, with the market now breaking above the neckline at 110.53 and potentially exposing fresh upside over the coming weeks towards the 115.50 area. Looking back, if we take the high that we saw back on the 3rd of February, that comes in around 115.34, and this is a level that could get tested, with it also coinciding with the measured move objective off this potential double bottom. At the same time, the market is still locked within a more well-defined downtrend, so it is also possible that we fail to see any upside follow-through from this double bottom and trade back lower, with the market putting in a lower top ahead and heading back down towards that recent multi-year low from the 13th of March, going back to 104.62. So at this point, it's a bit of a wait and see, and a lot of it will be helpful when we see how things play out over the coming sessions. Key immediate short-term support and resistance comes in at yesterday's low at 109.60 and yesterday's high at 111.88 above. Sterling dollar. So cable remains locked within a more well-defined downtrend, but clearly we've seen a very intense push over the past several days out from those multi-year lows at the 145.65 level. At this point, gains have stalled out just shy of the 2015 peak at 155.52, so there is a possibility that the market rolls back over now in favor of the downtrend. If the market does take out this 155.52 high, however, it could signal a more significant shift in the structure. At this point, it's a bit of a wait and see, but the key high at 155.52 is the level that we need to pay attention to. Below, taking a look at short-term support, a breakback below 153.28, that's the low that we saw on Wednesday, would open the door for downside pressure. Dollar yen. So dollar yen has been locked within a consolidation over the past several weeks and even months, though there is some downside pressure here that suggests that the market could break a little bit more. 118.23 is critical support, and the figure at 118 is also very important support. If the market takes out these levels, it could open the door for a more significant pullback down and towards the 117, 116 area. Although, even if we do see this pullback towards the 116 area, while the market holds above the December low at 115.55, the structure still remains highly constructive, and buying dips will be a strategy that is employed by trend traders. Overall, the outlook continues to favor a push above 122.03, that recent 7-year high, for a push beyond there towards the 125, 130 area further up. But again, short term, if the market takes out 118, there is risk over the coming days for a more significant pullback into the 116, 117 area. Euro Swiss. So Euro Swiss continues to do a good job of recovering out from those recent 102.35 lows, and with the recovery intact, fresh upside is seen back towards the 108.15 peak that we saw on the 20th of February. At this point, any setback should be very well supported ahead of 103, while only back below 102.35 would compromise the recovery outlook. Aussie dollar. So Aussie has raced higher in recent trade, taking out some key resistance to trade all the way up to as high as 80.75 on Wednesday. But the market was unable to close above some previous support, now turn resistance at 80.33, and could be poised for a resumption of the broader downtrend with a lower top side out and fresh downside seen back towards those recent 75.33 multi-year lows from the 2nd of April. Dollar CAD. So dollar CAD has continued to extend its declines following that important break below 123.50. The break below 23.50 opened the door for more correction and didn't shift from the bullish outlook, but with the market now trading down towards that measured move in the 119 area, it is possible that the market starts to look for the next medium-term higher low ahead of a bullish resumption back eventually above the 128.35 recent 5-year peak and towards the 2009 high at 130.65 further up. Kiwi dollar. So Kiwi has been correcting over the past several weeks, though the market is now looking to put in a medium-term lower top ahead of the next major downside extension below the recent multi-year low at 71.76. At this point, only a breakback above 78.90 would compromise the bearish outlook. SPX 500. So the S&P 500 did put in a fresh record high this week, trading all the way up to 2126, but the market was unable to hold or close above the previous February record high at 2120. This suggests that the market is comfortable finding a top around current levels and could be poised for a more significant pullback over the coming sessions. At this point, though, we're going to need to see a break below 2040. That's critical support for this market to suggest that a top is in place and accelerate declines. Gold. So gold has done a very good job of being well supported in recent weeks, and the market, it looks like it could be trying to put in a more significant longer-term base. While the market holds above 1175, this outlook is intact, and a pushback above 1224 will confirm or strengthen the outlook and open the door for more significant upside towards 1300.